Good morning and welcome this morning to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend Connie Hill. She's a 20-plus year veteran of the financial market. She's there to help answer your questions. And it seems that the futures market in some areas a little bit quiet this morning, in others not so much. We'll take a look and see what's going on here this morning. Some currency moves. Both on the dollar and the yen, at least initially here, and maybe some geopolitical risk. We'll talk about that when it comes to things like energy futures. So we'll get into that discussion here really quickly. A couple of quick reminders, however, and some housekeeping items. Remember that everything we talk about simply for illustrative and educational purposes only. It is not a recommendation of any kind or any particular account or strategy. Remember that futures and futures options trading involves substantial risk. It's not suitable for all investors. Make sure that you understand or read the risk disclosure statement for futures and options prior to considering any options trading strategy. Also, remember that options trading requires separate trading authorization, so that you're aware of that. And futures margin is required. It is an amount of money that you are required to deposit in your futures account to maintain or initiate a futures position. We'll talk a little bit about that as we get into this discussion this morning as well. Also, remember that things like virtual currency derivatives, futures on those virtual currencies involve unique and significant risks. Make sure you read the NFA and the CFTC customer and investor advisories regarding those products. Recognize that virtual currencies are a digital representation of value. They do not have legal tender status, and we'll get into those discussions today. Just keep that disclosure in mind. We're going to use some technical analysis today. Not a guarantee of future success. It is theoretical in nature, as is any type of analysis. Also, remember that we're going to be using the Thinkorswim desktop software platform, specifically the paper money version. That paper money version of the platform is a great learning environment. It is not, however, a guarantee of future success, and it doesn't do certain things that a live trading account will do. Fills may and oftentimes are different in paper money than they will be in a live trading account. So just be aware of that. Again, also remember, as we get into this discussion, anytime we talk about stop orders, whether we talk about buy or sell stop orders, it doesn't matter. Stop orders that generate a market order, basically a next available price order in a futures contract, will be worked by the exchange as an exchange designated limit order within a protection range. And there is the possibility that those orders will not fill, that they will be rejected, or that they may not generate an order fill, like we said, may gap around that stop protection or that protection range. So that's something to pay attention to and be aware of, especially in a fast moving market, that could be the circumstance that occurs, which means that a stop is not a guarantee of risk management. It does not guarantee a fill. So we'll talk through those discussions as we get into things a little bit more closely. Let's jump over here to the Thinkorswim desktop software platform. Along the way, I'm also going to show you some resources where you can learn more about futures trading and where you can go for more information, because I will tell you this, I'll just tease this a little bit. There's some really interesting things afoot in the futures market coming from the futures exchanges. We've seen already some response to consumer demand for things like micro futures in a lot of different products. One of the growing areas of demand, and we'll see if it holds up, because they've done this before, but we'll see if this holds up again, is the idea of single stock futures contracts on individual equities, which is something that has been talked about for a long, long time. So we'll see if that ultimately materializes. But take a look here at the S&P 500, the / ES, the big equity future contract here in the broad market. Kind of seen a little bit of a neutral day. We've seen a couple of these spinning top candles following a little bit of a pullback. The RSI kind of turning back up a little bit here. So a little bit of strength momentum-wise, but not a lot of strength price movement-wise. We'll take a look at this in the shorter time frame in just a few minutes, and also in the micro contract regarding this / ES product. Taking a look at the NASDAQ, after a little bit of NASDAQ weakness, fairly far under the 50-period moving average in this case, approaching the 200-period moving average, which it seems certainly that is one thing potentially that investors are looking for, is maybe a touchdown on that 200. We haven't seen it for a while. In fact, the last time we were at or near the 200-period moving average was back in the April-May timeframe on the futures contract. The 50-period kind of rolling over, these two converging on one another, the 50 and the 200. A little bit of weakness RSI-wise here in the NASDAQ at the moment, so maybe a little bit more consolidation in the technology space. And then in the Russell 2000, a bit of an upward move in today's session. Now, that upward movement hasn't translated into upward price movement necessarily, but we got a bit of a kind of a up off of, yes, in the last trading session, up off of that 50 period. So above the 50 period moving average. You can look at this maybe as a skewed head and shoulders. So if it broke, the projected target may be down around that 200 period moving average. You've got RSI, though, continuing to climb along with price. So a little bit of a bullish divergence here in the ES futures. I wanted to look at a couple of other futures contracts here really quickly. I'll just use this same context, and we'll just put in here / CL. This is the crude oil contract. And we've looked at this contract before. We've looked at its movement staying relatively neutral. And this is where I talked about the fact that we've got some geopolitical risk going on. There are escalating tensions once again, as there almost always are, between the U.S. and Iran. There's contention over the Straits of Hormuz. There's contention over the sale of refined products into China and the sale of crude products as well. So crude oil, despite that geopolitical tension, seeing some downward pressure in the last few trading sessions. In fact, you can look at the RSI perhaps as the gauge of that and seeing some of that downward pressure. But crude oil, the big crude oil contract, kind of sitting right at or just above that 50 period, the 200 period moving average. 50 period moving average still rising. So we could potentially, if that escalates, if that tension escalates into supply constraint, or that's the perspective, we could see a golden cross. We haven't seen a golden cross for some time. The 50 period, however, is nearing its closest approach to the 200 period. It hasn't crossed it yet. It's not as close as it was back in August, where there was that potential for another golden cross. But we're still starting to see this maybe a little bit of a neutral range, almost kind of between this 65, 66 range. If we were to draw this in here at the top, neutral crude movement between about 66 and about this support level down here around the 62. Now, that makes the argument that if we didn't see those escalating tensions geopolitically, because I'll tell you, if this were the geopolitical market and the crude oil market of, say, for instance, 2008 or 2009, I think you'd see that kind of geopolitical risk pushing crude oil well into the $80 mark. Again, that's simply based on experience and anecdotal evidence, and not based on any kind of technical analysis here. But the fact that this is kind of sitting at this lower portion of this neutral range with escalating tensions over the past couple of weeks suggests that maybe there is, if not a supply overhang, that there is a lack of demand, perhaps. It goes both ways, right? Both ways, supply and demand both impact this price. Generally, crude oil is more reactive to supply constraints than it is demand destruction, but we've seen a lot of demand destruction, I think, too. And that RSI, again, I think is kind of indicative of that. Now, that being the case, I also wanted to look at a couple of other things / VX, kind of getting a sense of what VIX futures are doing. Remember, this is different than the VIX product itself. The VIX underlying, the volatility index, not a tradable instrument. The VIX futures themselves, however, / VX, are a tradable instrument, so they're reflective of supply and demand pressures from the market, where the VIX is not, even though it's an indication of supply and demand pressures for the options market of the S&P 500 index. Weird kind of seal balancing on a beach ball, balancing another beach ball on its nose type of relationship here. So you see the RSI kind of tipping a little bit lower here, though we see the VIX going a little bit higher, these VIX futures, suggesting that maybe there's a little bit more concern, and there's an anticipation of potentially a little bit more concern here in volatility increases. But this tends to react in a mean reverting way, much like the VIX index itself. Higher prices are met with selling pressure, and that pushes the VIX futures back down, very closely in line with the VIX itself, although there's not necessarily a direct arbitrage. There may be a direct arbitrage between S&P 500 index options and VIX futures as a relationship there, but there's not a relationship because the VIX, again, is not a tradable instrument. You don't have a direct arbitrage between the VIX product itself, that index, and the futures. Now, you might trade, some traders may arbitrage via VIX index options, but they're generally a little bit less liquid, perhaps, than SPX options. All right, let's take a look at another one here, DX, which is the dollar index. And I drew these lines on this chart earlier this morning, a couple of hours ago, and starting to see this kind of symmetrical triangle in the dollar index. The dollar has been rising just a little bit over the last couple of trading sessions. The RSI for the dollar index kind of breaking out of that range. And that would suggest that maybe there is some continuing upward pressure on the currency, on the dollar, relative to the basket of other currencies. We'll take a look at that in a couple of the trades that I've been looking at this morning. Now, I wanted to look at a couple of other futures contracts here, just as we kind of cast our eyes around the market that are of interest, /GC. It is Lunar New Year. Congratulations and happy Lunar New Year to those of you who observe and celebrate, or maybe just interested in eating some good noodles and dumplings today, which is something that is supposed to bring good luck on Lunar New Year, as I understand. But gold futures down just a little bit here, and maybe kind of seeing what Pat Mullally and I used to call in the morning huddle, which was the precursor to the Schwab Network. Schwab Network brought to us by our media affiliate, Charles Schwab Media Productions. Pat Mullally and I used to call this a milquetoast ascending triangle, because it's an ascending triangle that comes following a rally to a new high. And it typically is one, the reason we call it milquetoast, or called it a milquetoast ascending triangle, is the one that doesn't have necessarily the same oomph behind it that a typical ascending triangle type of pattern might have. Now, that's, again, anecdotal and experiential, but at the same time, you can see that the RSI here significantly lower than when the price moved to that new high in that strong rally. So backing off of this resistance level around the 51.74, finding a bit of a support along that diagonal trend line, there is the potential for the breakout. But rather than looking at a longer kind of ascending triangle typical measurement objective, some traders may use simply that previous high or that area of some previous resistance as the measuring target if in fact price does break out. And the deeper this gets, we've talked a little bit about this, the deeper this price gets buried into the apex of this triangle, we're kind of in that prime breakout area from a technical analysis basis. No guarantees by any means, but we're kind of in that prime area at which a breakout might occur, or technical analysis would suggest that that breakout would occur. And it's kind of finding the bottom of that triangle at the moment. So the potential for the breakout is, I think, weakened somewhat by that. And as it gets deeper into this angle, there is the possibility that it comes out to the downside, perhaps, and finds the bottom of the triangle, kind of the base of that triangle, as a potential level of support. So traders looking to trade that potential could be using the break of that diagonal trend line as an entry signal into a bit of a bearish trade, the same way that a trader who was speculating bullishly could use the break of the resistance level as an upward or more bullish move. And you can kind of see that momentum being echoed by the RSI here in the near term, kind of in an absolute range, lower in its range, but also kind of breaking down below that line, perhaps leading price a little bit lower here in the gold futures. The other one that's of big interest for sure, it's 4/SI, the silver contract. And you can kind of see that same perspective of what's already happening here with silver in terms of never really building that milquetoast, even ascending triangle, maybe a little bit more of a kind of symmetrical triangle type pattern here, if we were to draw that in here, and getting near that apex as well. But RSI kind of dribbling a little bit lower here in the near term as well. So silver seeing some weakness. Now, that being said, we've just come off of a holiday weekend. It was President's Day. It is the start of a holiday weekend or a holiday week, the Lunar New Year, which probably impacts gold a little bit more than silver. The largest gold buying region in the world is China, and I don't know enough about the kind of ethnocentric realities of gold buying from that standpoint to know whether or not gold buying steps up or steps down during Lunar New Year. I suspect it tends to step down a little bit, but then we rotate into some of the other holiday-based in the subcontinent, holiday-based buying of gold in India and elsewhere. So there is the potential for that to move a little bit higher, but silver seems to be breaking down somewhat here. Now, the question is there that buying the dip mentality? Because we're kind of back down near the base of this range in which silver really started to accelerate. But nevertheless, when it made that move higher, and this is something that I've noted over the last little while, is that there was still, when we made that big run to the upside, there was still a bit of a bearish divergence in the RSI. And I think that is kind of really indicative of the fact that maybe there was that possibility of a pullback and a little bit of a bounce here. We're kind of seeing it maybe coming back in. The question is, does this now become, if we look at this from a technical analysis perspective, do we have a left-hand shoulder and a very sharp peaked head to this pattern, and then perhaps even a right-hand shoulder here with the neckline down around the 70 mark, which would put the potential, if we're looking at 70 to 120 here, that move possibly could put this back down into these support levels down around that $40 range, which would be a big move to the downside. But remember, that's the range in which silver was trading. Now, I think if you subscribe to the perspective that there's industrial demand for silver that goes beyond kind of this speculative upward pressure, that maybe that baseline becomes this level of support here at 70, and that speculation maybe takes off again. If we do get a bounce and we maybe get this next leg higher, that remains to be seen. We're not quite there yet. All right, so now that we kind of have gone through the pantheon here, I wanted to take a look at a couple of other things. I want to pop over here to my futures grid, and we'll pop over here to the futures grid with labels. And this is the trade that I was looking at here this morning. This is the Japanese yen. Now, with the strengthening of the US dollar, there is a close relationship between inverse relationship between the movement of the yen and the US dollar, and they tend to move obviously in opposition to one another. This is yen. This is reflective of the yen spot price in yen priced in dollars. So that if you were looking at the Forex pair, this would be the JPY/USD, the yen priced in US dollars. So seeing a little bit of a bounce down from this resistance level, kind of this diagonal double top here, if you will. And again, building perhaps a little bit of a symmetrical triangle, but it's a bit broader, longer symmetrical triangle. If you were to draw that line, that looks something like this. The apex puts it out here once again with that center point of that apex down around the 960 or 0.006490 range. Maybe if you were to extend those lines out and triangulate where that apex might be here, but starting to see this bounce down again in the yen as it starts to weaken. Now, anecdotally, I will tell you this. I mean, I think the fact that the yen has been strengthening against the dollar has been strengthening against other currencies. This is a level at which, this 65 level or 0065 or 00646, that's an area that's been defended before. If we go back to a longer term chart here, let's go to a 3-year weekly chart. You can see that these areas right here, this is an area that the currency has been defended by the Japanese central bank before, where they don't let that currency fall much lower than this 0.0064 level before stepping in with some intervention efforts. And then that price begins to rise again. And it's been only in the last 2 or 3 years that we've started to see this back down in this range once again. Now, anecdotally, and what I wanted to get to, and some of you who, if you've been following me on X, and Connie put my X handle out there, at Ben Watson CS, we spent President's Day weekend kind of going around to some smaller and lesser known state parks and national parks, and I've posted a couple of geography quizzes out there on X. But one of the things that we happened to notice, and it was almost across the board, kind of an interesting phenomenon, is that we saw perhaps more Japanese visitation to those parks than we've seen before in going to those places. So I don't know if that's related to the strength of the currency currently, or if that's just a seasonal impact, but that is something that we happen to notice anecdotally. And does that relate to this? Well, it maybe relates to the fact that the yen was getting a little bit stronger here, although those lead times for travel tend to be a little bit longer, perhaps. All right, now the way that I put this particular trade together, I'm going to pop this grid. First of all, is the longer term chart of the two that I have in this futures grid. It is a 1-year daily chart, but it also has my labels on it, my futures labels. So the tick size is 0.000005. That's this significant digit right here. When that moves, that's $6.25 every move that makes, and it moves in 5 increments of 5. The point value is 12,500,000. So you take this value times that point value, gives you the notional value. And if you want to see those numbers, you can always click right here on the drop down, go to the futures grid, and you can see here's our /6J, the Japanese yen futures. You can see the initial margin. You can see the tick size and the tick value, and then you can calculate that that notional of the contract from that information. So we've got that there. Now, this is linked. This chart grid is linked in the description page for this webcast, but I'm going to do this. I'm going to go ahead, because I like you guys a lot. I'm going to go ahead and I'm going to share this grid with you. Remember, anytime we share anything, it is for illustrative and educational purposes only. It is not guaranteed as to time or accuracy, but there is this futures grid. The other side of this futures grid, this is a 1-year daily chart. This is the RSI. The other side of this futures grid is this is a today 5 minutes. So this is the shorter time frame. And so what I was looking at here as this was setting itself up, here's that 0.00655 range, kind of the apex of that triangle, kind of where we were seeing a little bit of resistance in the short term. Here's the downstroke on that that symmetrical triangle. You can see that it is trending down. That's that resistance level to the upside. And as I kind of squeezed this down a little bit, I was looking for where is that support level to the downside of this pattern. And it's down around that 0.00646. So if we kind of zoom back over, that's that level right here, 0.00646 is kind of that support level where I saw what was a previous resistance. Remember, previous resistance can become new support. Doesn't guarantee that it will, but oftentimes that's what happens is it takes that dual role between support and resistance, and old support can become new resistance, and old resistance can become new support. So looking for that to potentially be the next level of support, looking for that diagonal downstroke line to be the next resistance level. So we go back over here to the chart, and I started to see in the last few hours Bounce off of support here at the 0.06544 level, bounce off of support at 0.00654, bounce of support off of 0.00654, and again here. And then it kind of bounced there, and I started to see that weakness, started to see that trend strength falling off just a little bit. And then as it started to move down and got to that level of support, I started to see that trend strength as it moved down get stronger. Remember, this is the ADX now, and the ADX is a trend strength gauge that is not dependent on trend direction. It can be a strong uptrend, it can be a strong downtrend. Anytime the ADX is above the 25 level, that indicates a strong trend in whatever direction the price is moving. So if price was starting to move down and the ADX was climbing, that's an indication that downtrend is getting stronger. Likewise, if price is moving up and the ADX is moving up, that's an indication that the trend strength of that uptrend is getting stronger. But you can kind of see what's going on here. So I set my entry in this trade, and I'll just grab my text note here. So my entry was right here. This is my entry in the trade, was that break, and I circled it because it broke just a little while before we started. Broke to the downside. The target, in fact, is going to be down here at that level of support. Let's go right there. And there's our level of support at the 0.00646. And again, no guarantees that it's going to get there. And then my stop in this particular case, I looked at the potential of stopping it out if it went back above here. I looked at the potential. Let me just put this line on the chart. So let's go show orders and apply and okay. So in fact, my stop to exit the trade to exit this position, because we went short this futures contract, but the order to get out is up here at the 0.00657 level as a potential stop. Now remember, that's going to be a stop. That's going to be, in this case, a buy stop order, and that buy stop order then triggers and generates a marketable market order. That's going to get worked as an exchange designated limit order. Now, we could create that as a buy stop limit order where we designate that limit price. In that particular case, if it's going up, I'm not really necessarily worried about it moving up significantly higher, in this particular case, because of that protection range from the exchange. Could it not fill? Yes. Do I have risk to the upside? Yes, I do. In this particular case, because if that order doesn't fill and it continues to move higher, then that continues to work against me being short the contract. On the other side of that coin, is setting this target here. So let me just do this real quick. Let me put this in right at the top here. That's our stop, just so that we can kind of be consistent. There's our stop. There's our entry. There's our target to the downside in this short-term trade. Now, is it likely to make a sharp move to the downside? Probably not. It hasn't been moving in a sharp fashion over the course of the last few hours. This is today's trading, so we haven't seen that sharp movement. Could it? Yes. The Asian markets are closed at the moment, and that tends to kind of slow things down here as well. Lunar New Year tends to slow this down, so this could be a slow burn to the downside, and making that stop order and that target order good till canceled allows for that potential for this to continue to drift to the downside. You can see that downward trend is still very, very strong at the moment. That ADX well above the 25 level, indicating a pretty strong trend, but it is not as strong as the trend that came in just as soon as this broke that support level, but still looking for this to move to the downside, for that yen to weaken again relative to what we've been seeing in the dollar. If I pop over here and just put in /DX, we can see what's going on in the dollar in that same time frame, right? So it's the same time frame, dollar getting stronger, yen getting weaker. We're trading the yen here against the dollar, but we're trading it via the yen futures and shorting those yen futures and looking for that move to the downside here. Now, the other place that I wanted to go here really quickly is, let's pop back over to our monitor tab and just kind of see in our futures group, because I think that might be the only trade that we've got on at the moment, and so it's working in our favor in this particular case. The other trades that we put on last week, those all either rolled off on our targets or they rolled off by hitting those stops. So we're kind of got a clean board here. We're just short this /6J. So I went back over here to the charts. Let's take a look really quickly. I'm going to bring this chart to that side-by-side view once again. You can see the dollar and what it's been doing. And dollar just broke out against that diagonal trend line. So that's kind of what I was waiting for here. I don't know. Helen, I don't know if they do or not. Probably don't. You probably know better than I do, but who knows? And I don't know if that has an impact in other regions that maybe impact the Japanese yen trading as well. But what I do see right now is kind of this breakout of the dollar gaining some pretty significant strength, which should kind of wrap itself around a couple of other things. So if the dollar's breaking out, still with a fairly weak trend, that ADX may take a couple of ticks or a couple of candles here to catch up. But if we were to look at maybe where that next, cool. Okay, that's cool. I didn't know that, Helen. Thank you. I appreciate that context. I just like tasty noodles and dumplings. So, and a lot of sushi. So looking at that potential next level of resistance overhead in that symmetrical triangle on the left-hand side, if that breakout continues, where is that next target? So that puts that next target maybe right up here around that 97.73. So let's jump over here and see what our tick size is 0.005. So it's going to be this significant digit right here. Tick value is going to be $5. Yeah, Kevin, gold and silver likely going down in that inverse correlation to dollars. Point value 1,000 times that 97, that's going to give us our notional value. And if we drop into the futures, drop down here /DX, our initial margin into the trade, 21.71. So let's see if we can put this trade on in the short term here with, I'll just kind of target these areas real quick with my tags. Let's make that our target now that we're in. And then I'm going to use this resistance level that was a resistance now potentially as a support level as my stop. And my entry was going to come on the break of that resistance level, which it's doing now. ADX starting to turn up a little bit here in this particular case. And so starting to see some gain in traction in the US dollar. So we'll look for this target to the upside. So what we're going to do is we're going to right click. We're going to buy custom with OCO bracket. And we're going to give this a little bit of a limit. We're going to go to the 97.40 as our limit price to get into the trade. So we're going to specify that limit. We're going to buy this up to 97.40 as our limit. Because I'm willing to give a little bit of room to the upside to get into this trade, opportunity cost being what it is. And then going up to this 97.70, we'll go to 97.74, 97.740 as our potential target here to the upside. And that's going to be a sell limit order, 97.740. And we're going to make that good till canceled. And then we're going to make our stop down here 97.150. We'll make that 97.150. And we'll see how this works itself out here. 150, whoops, 90, whoops, 97.150. Not period. There we go, 97.150. Make that good till canceled. That's going to be a stop order. That's going to be a sell stop in this particular case. And yeah, the /DX futures contract trades on the ICE exchange, and you may need to call, as Connie said, and I appreciate Connie doing that. But we're going to go ahead and we're going to put this order on. Again, our initial margin, 2171. You can see the transaction costs here, making sure that this is the order that we want. I'm going to put this in my futures group, and we're going to click on send. And I got rejected. And do I not have futures liquidity in this account? I should. Let's see. We might have to. All right, we might have to adjust. So maybe I don't have the liquidity in this account to do that. Anyway, that being the case, that can happen, and monitor your position sizes accordingly. But we might need to make an adjustment. The great thing about paper money is that you can make those adjustments to liquidity. You can't do that in real life as easily necessarily. You can't click a button and say, unless you transfer from another account, but you can't just say, give me more money, the way that you can in a paper money account. All right, starting to see a little bit of strength gaining here at this point. Let's pop back over here to that /. Oh, and I wanted to talk about this for just a second, and I'm glad that we brought this up. So I'm going to pop over here to our futures, and I'm going to come down here to silver. And one of the things that I just happened to notice, and again, remember I talked about the fact that the markets have responded to the exchanges, have responded to consumer demand very effectively. In fact, we went from the big silver contract, which is /SI, and you can see the margin requirement on that, $77,000 on that particular contract. Big notional value. You look at we've been talking and trading you could go to the money tree for sure. We go to the /SIL contract, which is the one that we've traded quite frequently here in this particular class as an example trade. And the notional value here is 1/10. But you see the initial margin on that /SIL contract has increased substantially. When we started trading silver a couple of months ago in this class, that initial margin for a silver trade in the 1,000-ounce contract was about $2,500. It is now over $15,000, which is reflective of the exchanges raising margin rates for the sake of volatility, to protect themselves and to protect investors. But they've now listed a /SIC, which is the 100-ounce silver futures contract. So this is a smaller notional. And if we click on that /SIC, moves the same way. It's its own product. Remember, these are all going to be based on the spot price of silver, but the notional value of the contract is going to be different. So this is going to trade slightly different. Now, that presents an arbitrage opportunity between the big contract, the middle-sized contract, and the small contract. And, it's kind of like Goldilocks or Silverlocks and the Three Bears. Anyway, there's a metaphor in there, I'm sure, somewhere. All right, let's take a look here really quickly at the notional value of this particular contract. So tick size is 0.001, and that's going to mean this is, or 0.01. That's going to be our significant digit right there, is the 0.43. I'll tell you, what's really cool is you start to watch the Olympics. If any of you have been watching the Olympic coverage, and you begin to learn what the significant digit is in Olympic timing in those timed events. And so you're now starting to watch tenths or hundredths or thousandths of a second in some cases. And so you get focused on what that significant digit is. And same thing with the futures contract, based on the tick size, you get a sense of what the significant tick digit is in this particular case. Deepak, it can, yes, but generally those margin rates are set by the exchanges kind of across the board in terms of the volatility of whatever the underlying product is. So tick value is $1. So every time that ticks from 8 to 9 or 9 to 8 or 8 to 7, like it's just done, that's representing a value of $1. The point value, so if this number changes from 72 to 73 or 72 to 71, that's $100. And then the notional value, so that $100 times the 72 means the notional value of this 100-ounce silver futures contract is 7,241. If we were to change this to /S SIL, which is the other one that we've been trading, you see that's 10th higher, that or 10% higher. That's 72,360. Point value is 1,000. Tick value is 5. So different tick value, different point value gets you to that larger notional. And then if you go to the large contract /SI, this is the bid contract. Notional value 361,625. Tick value, tick size, same thing. It adds one significant digit to the tick, so there's more granularity there. But the tick value goes from $1 to $25. The point value goes to 5,000. Take $5,000 times 72.345, and you get the notional value in the contract. So let's go back to that /SIC contract. And the reason that you're not seeing much here is this started trading 1, 2, 3, 4, 5, 6 days ago. 1 week ago is when this futures product began trading. So the question is there a lot of liquidity there? And I would suspect, just given this kind of intraday trading chart and the fact that there is some trading volume going on here, if we were to go to the trade tab for /SIC and we were to look at these contracts, so this is, whoops, that's VIX, /SIC, and we go to the trade tab, you're going to start to see some volume. So this is the active contract, 8 days to go. There's still some volume here. There's a little bit of rolling off to the next contract, the next deliverable. You don't have as many deliverables here as you do in the larger contracts. You don't have options on those futures contracts to absorb risk yet. But if you look at, say, for instance, /SI, the larger contracts, there are options to offset some of that risk. You see the significant change in that volume, a lot more volume in the /SI, /SIL, the mid-size contract, no options there, but a lot more volume. And that's where the majority of that volume is trading, is in that mid-size contract and /SIC. And there's that contract right now. That's the active trading contract. It's got 8 days to go. So looking at a fairly short term. Now, in terms of what's going to happen in terms of that contract rolling from one contract expiration to another. So in a product like this, which is silver, is this small contract, I believe, is a cash settled futures product in something like /CL, which is what Stay Gold is asking about, which is /CL, which is a physically delivered or physically settled contract. In that physically settled contract, you're not going to have a tanker truck pull up to your house with 1,000 barrels of crude oil. You're going to get a notice, and it's going to be a cash delivery from that point. But if you ever wanted to find out more about it, just go here to the Analyze tab and go to Fundamentals for whatever the product is, and you're going to see the last trading date for the contract, and you're going to typically see, for something like /CL, the notice dates for those contracts in terms of when those contracts are rolling off and when that delivery notice is. So don't rely, however, on the futures desk to notify you that a contract is expiring. Be aware of that and look at either closing the position or rolling the position prior to that last trading date. This is always the place that you can go to the Fundamentals tab, or excuse me, Analyze tab, and then Fundamentals, and then go to your crude oil contract. And that's also going to tell you the margin for the individual deliverables. You notice that those margins change based on theoretical volatility and risk. So, guys, we are out of time. I didn't even realize it, but wow, the time flies so fast. I want to pop you over here really quickly and show you a couple of quick resources. Go to schwab.com/futures for more information about trading futures here at Charles Schwab. And if you want to learn a little bit more about the product or about some of the other webcasts and education offerings that we have right here, pop into our Trader Talks webcast page on YouTube. Make sure that you click on subscribe, and then you can search for whatever you want to search for right here in that search function. My thanks to Connie Hill for helping me out. My thanks to Gabe and our great production staff and our great reviewers, Nikki and Mindy, for taking time out of their day to help us out today. And thanks to all of you for being here. And we will see you guys again later. I will be back later today teaching long options this afternoon. We'll see you soon. Take care, everybody. Bye-bye.